Reserve Bank. Before we begin, we have a few housekeeping announcements. Sir, there are 24 participants from the media. I request the media participants to please stick to one question so that everyone gets a chance. I also request everyone to switch on the mic while speaking so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. Sir, with your permission, I will now call out the names.
Yes.
Thank you, sir. I will request Ms. Latha Venkatesh from CNBC TV 18 to please ask the first question. Over to you.
Thank you, Mr. Bridge, and thank you, Governor, for the opportunity. The worry is not so much with inflation and GDP, with the numbers in transition. The worry is with the way in which near-term call rate and repo rate have fallen. Call rate and TREPS rate have fallen way below the repo rate. I mean, they're almost a percentage point between 4.25 and 4.75 actually. So what's the thinking behind allowing that kind of a fall? On the 1st of February, the question we would have wanted to ask you is, how will you manage this large borrowing program? The market was rightly worried and yields shot up. So that question as well. The immediate short-term fall in call rate and TREPS rate, is it intentional? What is your view of how it may evolve? And separately, this medium term, how are you going to help it? Will it be OMO in liquids? What's the expectation?
So let me say, as mentioned in the monetary policy statement, liquidity is something that is our duty to provide. Ample liquidity, sufficient liquidity as is required to meet the productive needs of the economy. That is the first task. And the second task, to be able to ensure that monetary policy transmission happens, not only in the overnight markets, in the money markets, in the government security markets, the corporate, the credit markets, all the markets. So whatever we do with regard to liquidity is keeping this overarching goal in mind. Now, the tools that we have for liquidity, you are aware, we have a number of tools for them, especially, OMOs, long-term, short-term, VRRs, VRRs, so as to be able to ensure that we give liquidity and we keep the overnight liquidity at the policy repo rate. That is the immediate target, to keep it over there, and then hope that this will transmit into all other markets. The transmission, you are aware, has been quite good, especially, till December in all markets. After December, there was slight hardening, as I have mentioned. There was some hardening in the money markets, but overall, transmission has been excellent. We will continue, as I mentioned in my statement, that we will continue to provide liquidity proactively and preemptively. This is not something, that the exact details is not something that we always or by rule mention in the policy statement or only, in the policy statement. Liquidity is a continuous operations that is done. So you have seen that we have provided liquidity even outside the policy statement, as we did, in later when we felt that there was a requirement for liquidity in the second half of January. We followed it up with whatever we had announced in the monetary policy statement. We followed it up with liquidity. So all I can say is that we will continue to provide sufficient liquidity with an aim that the monetary policy transmission happens in all markets.
So, sorry to intrude, but there is no mention of the word switches or buybacks by you or by the government. So the market is worried in the medium term. Right now it is a little stupid to ask about the liquidity is so plentiful now. But in the medium term, Do these things still, I mean, is
Are
there a
you
place?
referring to the government? See, the government program, I think, again, we have been looking at the gross numbers, which I don't think really, is the correct way to look at it, frankly. The way to look at it, we have been looking at, 17 plus lakh crore or something. But there are, much more redemptions this year, coming year, next year, than, they were last year. So as a result of that, the gross calendar will obviously, be higher. But if you look at the net numbers, 11.53 lakh crore is the number for this year, government securities borrowing program. Next year, it is projected, it is budgeted to be 11.73 lakh crore. It's only 20,000 crore more, which is, I mean, one would have expected at least, if the budget size is going up by almost 9% or so, 8 to 9%. GDP is expected to grow at 10%. One would expect a 10% growth. The growth is much less. We should really be looking, at net. Number two, also, you find that this year or in the year to come, there will be money will be raised also through the treasury bills, which will help, in further. I think it will help, in managing the yield curve better, and we also find that the budgeted numbers for small savings are also, quite conservative. So I think, the kind of numbers, the borrowing program that the government is looking is much on the lower side, and they should be able to raise these kind of resources at very reasonable prices. I'll request Mr. Ravi Shankar, to further add onto the switches, some 2.5 lakh crore of switches have also been planned. That will also, further help on the liquidity and the management of the yield curves.
That's right. And buybacks are not factored in at this point in time. They are factored in during the course of the year. To the extent there will be buybacks, the gross borrowing number to that extent come down. I just wanted to, Governor explained all the factors clearly. I just wanted to draw the attention to the sense that the, gross borrowing is large. We should put them in context. Look at 2007-8. We were borrowing 1.9 lakh crores per year. 2 years later, 2.910, we were borrowing 5.8. 3 times the gross borrowing. Was that managed? That was managed. You look at relatively. Look at 2020, 2021. We were borrowing about 7 lakhs. In 2 years' time, we were borrowing 15 lakhs. Right? So these numbers, go up. If you compare to that, the increase is nothing significant at all. I'm certain Reserve Bank will be able to manage the government borrowing program quite efficiently. Thank you.
Thank you, sirs. We will take some more questions from our left side before we come to the right. Next, I'll ask Manojit Saha from Business Standard to ask his question. Manojit, please.
The TRIPS rates have collapsed, which has created some pain for the non-banks. But at the same time, SDF, bank parking in SDF has gone up very significantly, over 3 lakhs. Is there a plan to tackle lazy banking? Is there a discussion on whether you can cap how much banks can borrow from SDF, or widening the corridor, bringing SDF down so that banks are forced to lend to productive resources? And consequently, do you think the CD ratio of more than 80%, 81% is a new normal now, given the constraints of deposits that we have seen?
See, we did review the liquidity management framework. Your question is actually linked to, the liquidity management framework that was done recently, and not many changes were announced. Let's keep in mind that this is a complex subject, because these three markets, your TREPs, call money markets, and the repo market, there is very high linkage. We mentioned that when we decided not to change it. In the medium to long term, there is a very high correlation, and so that's why we continue to target the call money rate, which is called the Walker. Over short periods of time, on day-to-day basis, there can be fluctuations. There can be non-alignments. But on the whole, I think as of now, we are not looking at making any changes immediately. However, as you have also pointed out, there can certainly be different. There can be different ways of looking at it, which we are at the moment, as I mentioned, we are not looking at whether to change the corridor and how to better manage it. As I mentioned, this is complex. We are right now not looking at making any further changes. With regard to your second question on CD rate, see, this is cyclical. At a period when your credit is more than deposits, it's quite expected that the CD rates will go up. And when at times when credit is not growing so much, then the CD ratios will come down. And we have seen this happen over and over again. There is a time when the CD ratios go up, and then there's a time when the CD ratios come down, depending on where we are in the business cycle of the banks. But I may mention that for us, it's not the CD ratio which is important. What is important is liquidity. There is an LCR framework for it. There is an NSFR, net stability funding ratio, which is there for medium-term liquidity. There is an LCR for the immediate or the 1 month liquidity that we are looking at. Both of them for the banks as well as for the non-bank financial companies are at very comfortable levels. So there is no issue over there.
If I could just add one clarification. There was no mention of INR or BOP deficit in the policy. Is it because you are pretty much comfortable with the trade deals and the inflows and all? Is that the reason?
See, our macroeconomic fundamentals of the country, including the external sector, are very strong, very robust, very healthy. Whether you look at growth, inflation, whether you look at the current account on the external side, or you look at even the capital account side, I think near-term, medium-term outlook is very healthy, is very favorable. You are aware that the government has taken a series of measures to increase our external position. Number of bilateral as well as multilateral deals have been signed. EU, EFTA earlier, Oman earlier, UK, and now the prospective UK deal. All of these will help on the top of a very, very comfortable current account that was last year 0.6% of our GDP. First half only 0.8% of the GDP. On top of this, with all these deals, agreements, it should only further help. Not only on the current account, on the trade side, merchandise and services, but also on the investment side, because a lot of them have investment commitments. Like, for example, EFTA, I think, had $100 billion. New Zealand had $20 billion. On top of that, even on the investment side, the government has been very proactive. It has taken a number of measures. See, these are things, first of all, let's keep in mind, these are in the domain of the government. These are not, in our domain. These are in the domain of the government. The regulators are there primarily to facilitate whatever economic activity is going to happen, whether it is domestically or whether it is in the external sector. But I want to remind everyone that the government has been very proactive, both on current account as well as capital account. Latest example, on capital account being opening up of the insurance sector to 100% FDI. That will help. This year, we have witnessed record deals in the banking space and the NBFC space, about $15 billion, of announcements or FDI, already that has come in. And then a number of other measures that now the government is taking. I was very happy to see in the budget the tax holiday, for example, for data centers. That should bring in a lot of investments in our country. Safe harbor rules were in the works for some time. The safe harbor rules now for IT, I would like to draw attention to all of you and to your viewers. I think this has not perhaps gained, the attention that it deserves. It's a very big move towards tax certainty, simplicity, ease of doing business within our country. All these GCCs, that you see are being set up, they will vastly gain from. And these are only some of the measures, that I have mentioned to you. In the near term, in the medium term, we are, as mentioned even in the monetary policy statement, we are very confident of meeting our external sector responsibilities, whether it is on the current account. You're aware, 11 months, we mentioned 11 months of imports. Now, that is imports. If you look at deficit, it is, my DG tells me, one should be looking at the deficits. So deficit is, if it is $10, $20 billion, let us say, so, we have sufficient reserves for many decades, not, 11 months of import, but many decades of deficit. Similarly, our short-term borrowings, debt, twice the reserves of our short-term borrowings, twice. So on the external side, we are very comfortable, and I did make a mention of that in my monetary policy statement. Thank you.
Yeah. Thank you, sir. I will request Ankur Mishra of ET Now to ask his question. Ankur, please.
Thank you, Bridgie, and good afternoon, Governor. I want your attention towards the inflation growth dynamics. On one hand, when you're talking about growth, you have revised your guidance upwards, and you mentioned about the deals as well, which augurs well. But on the inflation front, you are inching over 4% in the next 2 quarters. But you have also given a caveat that precious metals is accounted for that. So in that scenario, last time when you mentioned the same thing, you used the word Goldilocks, the sweet spot scenario. Are we still in the sweet spot, or you think the situation is slightly different?
We are certainly, in the same sweet spot, maybe even better. Because growth is looking up, growth is looking even better, and inflation is the same. Headline, one is looking at headline, 0.1, 0.2%, 20 basis points here and there is a very small number. Point number one. Point number two, it is headline. As mentioned in my statement, it is primarily to do with base effects. It is primarily to do with the volatility in the food prices, core inflation, underlying inflation, barring precious metals, is very benign, continues to be benign. So we are in the same position, more or less same position insofar as inflation is concerned. Growth seems to be better than earlier. So we are in a better position than we were, when we met last. Over that, a number of developments have happened. You are all aware, as to the reasons as to why, we are in a better position now today than we were earlier.
Thank you, sir. I will now request Anup Roy of Bloomberg to ask his question.
it has been our conscious effort that we continue to improve customer centricity, the customer experience, the customer delight that all of you, including us as customers, expect from banks, NBFCs, and the regulated entities. So, mis-selling, yes, this has been a concern. We have been mentioning it. There have been directions with regard to mis-selling. And this time, we have codified them. We'll be issuing the draft guidelines with regard to mis-selling. Similarly, there is a framework which we will now be taking out for compensation for small frauds, because we have observed that while in value they constitute a very small proportion, but in terms of numbers, I think 65% of them have less than 50,000 or so in terms of amount. So as long as they are defrauded, whether on their own accord or anyone's accord, no questions asked, 25,000 rupees or 85%. You will have the details very shortly, which will be there. It's a draft, and we will compensate them as long as it is unintended and they have lost that money. Would you like to, Shirish, would you like to bring in more details?
Like Governor said, this guideline will come out soon. Basically, both in terms of your question about mis-selling, emphasis is on product suitability, customer appropriateness, and also consent. These are the pillars on which we are will be giving the detailed guidelines. And as far as compensation, which is first time we are proposing the guideline, 25,000 is the limit. Of course, there will be some rules, and it will be one time. So, detail will be out very soon.
So, will the customer be compensated if OTP is given? That is very something. Okay. Thank you.
If he loses the money, no questions asked. As long as he has lost the money, making checks that it's not kind of malafide. It's not kind of malafide. So there are checks in the system to ensure that. That's why we have kept the amount very small. There is skin in the game for the customer, 15%. There is skin in the game for the banks, 15%. And the remaining amount we propose that we will provide from the Reserve Bank. And the amount is very small. We will see, how it goes. But for the small customers, for whom this actually means a lot, this is a way of providing some immediate relief, some immediate solace.
Yeah, thank you, sirs. I'll now request Alexander Matthew of NDTV Profit to ask his question. Alexander, please.
Good afternoon, Governor. Good afternoon, everybody else. You've covered quite a bit of ground. Let me ask you about what you said on credit growth. And you spoke about system-wide closer to 14%, and you said several pockets are seeing growth. My question to you is allied with what some of my peers have already asked. One would assume that the trajectory would increase heading into the new year as the impetus to growth increases. But is there going to be a curtailing of the extent to which it can grow by the fact that the CD ratios remain high? Have you factored that in? And there's an argument that has also been made that a large part of this spurt in credit growth we've seen in the recent past is gold loan linked. Is that something that you have witnessed? And also if you can comment on why you considered the measure that you did on REITs and MSMEs at this point, and maybe give us a little more detail on that.
So the first question I'll leave, to DG, because whatever I had to say, on credit growth, I already mentioned. I'll ask, DG Swaminathan to maybe add, little bit more flavor to the credit growth. And the gold loans, of course, which have witnessed huge growth rates to the extent of about 200% or so. Your second question, let me touch base on that, which is on MSMEs. So MSMEs are the growth engines. They are an very important component of our economy, especially from the point of view of generating employment. And so this limit of 10 lakh rupees has been there for quite some time. I think 2010 or so. 2010 is this limit. So it's basically, indexing for inflation. That's what it is, from 10 lakh to 20 lakh rupees. The second one is on REITs. Again, we had already allowed lending to InvITs. And so now, we are in the same vein, allowing lending even for REITs. This will further help the real estate sector. D. Swaminathan.
So on credit growth, of course, as you mentioned, overall it is 14% year-on-year, but there are different components as you look at it. Agriculture has grown at about December data at 12%, industry has grown at 13%, personal loans have grown slightly upwards of 14%, so it's more secular. It is not that any one particular segment has contributed less or more. Gold loan as a proportion to the total lending book is something that we will have to see. The percentages can be misleading, and that increase is not something which is unexpected, because primarily in the previous years, the unsecured personal loans had a major role in terms of contributing to the overall growth. When banks move more towards safety, when there are higher slippages seen in certain segments like MFI or personal loans which are unsecured, the collateralized loans will see a pickup. So there has been a shift, but that shift has been also aided by the spurt in the gold prices, which is all right. But system level, the LTV ratio is still below 70%. While, of course, we have even permitted, as Governor mentioned, slightly higher LTV, system level it is below 70%. So there is absolutely no concern in terms of, number one, you will have to look at the percentage in terms of the overall pie that it has in the bank credit. And second is that LTV levels are even comfortable at this point in time, so there is no worry. And MSME, as Governor clarified, 15 years now, so it's time that we relook at the numbers and also be supportive of this. You would recall that last year we increased for agriculture segment as well to 2 lakhs. So this is in keeping in alignment with that, so that the smaller customers are not deprived of access to formal credit for lack of collateral. Thank you.
Thank you, sirs. I'll now request Piyush Shukla of Hindu Business Line to ask his question. Piyush, please.
Thank you. Good afternoon, Governor, DGs. Thanks, Prit, sir. So a couple of queries. First is, possibility of uptick in commodity prices, rupee pressure. Of course, you said Goldilocks has even improved, but on inflation side, if there is an upside, do you see there is, or with the current pause, it means we are at terminal at 5.25. Second is, sir, in the government union budget that Finance Minister presented, the subsidy for UPI has been slightly lowered. I just want to understand, sir, some people in the payments industry, including the SRO that you have recognized for the payments body, they have suggested that we should, not on the customer side, you mentioned we are very pro customers, but on the higher value P2M transaction person to merchant, merchants of a certain category with a higher turnover rates, chroma and all, 0.03% MDR, because anyways on certain credit lines there is already a MDR. Do you feel that that could be, and you had earlier mentioned somebody has to bear the cost in your earlier remark. And I know I won't get an answer for this, but sir, any update on Tata Sons?
You have asked 3 questions.